All right, welcome to the Next Level Marketing Podcast. This is episode 6. I am Todd Martin, your host from Mission 35 Mortgages, and it's official. I am a level 2 mortgage agent. What does that mean? It means I can officially do private mortgages on my own. I do not need a co-broker or anything. This is a new rule that came out from FISRA that starts this year, meaning you had to take a private mortgaging course in order to do this. It worked out well with me since I started this last year. I took the course throughout the year. My first year came up in March. Officially I can do private mortgages again. So I figured it was a good time to talk about some of the pros and cons of private mortgages. Obviously, there are some serious cons about that. I'll get to them later. But let's talk about some of the pros, because there are some good pros to private mortgages, and we're seeing more and more people go this way, especially people that have some weight behind their investments and the ability to carry the interest rate. So one, there are just a lot less paperwork. It's a lot less provability on your end to do it. If you have the money and you have the ability to carry it, they usually just say they're usually easier to qualify for that way. Less credit checks, less letter of employment, less all that kind of stuff. If you can show that you have the wherewithal to carry the weight of the mortgage, then you're usually pretty good. Now, one of the downfalls to it is, you're usually only getting 1 or 2 years on it. So you're going through the process over and over again if you're carrying private mortgages, and that's your choice to go with private mortgages. So that's kind of the plus and minus with that same scenario. Some of the other positives with it gives you an opportunity to fix small issues that you might have going on. It allows you to boost your credit, allows you to deal with some ongoing credit issues. So if you have some debt to pay off, go get it fixed. If you want to, upgrade, bring the value of your home up in that period of time. If you have some renovations you want to do, if you have some repair work, some foundation work, or some roof work that you have to repair that, the bank just is not going to fund you because of those issues. It gives you the time to repair those issues while you deal with them. Private mortgages are more flexible and willing to work with you on those items while you deal with them. So those are some of the positives when it comes to private mortgages. Flexibility. They often happen a lot faster. Turnaround time when you're working with brick and mortar banks, monoline banks, places like that. They're not very fast. You're looking at a month to 2 weeks to a month minimum to get something turned around. So it takes time. Private mortgage, if you're working with them and you have everything ready to go, and you have everything you need, you can get it done in a week. You can get it done in a couple of days if they're willing to work with you. And so fast, less paperwork, less stress, and flexibility are some of the key pros when it comes to private mortgages. Some of the cons, obviously, they got higher rates. I've seen rates right now, 10, 12, 15%, depending on where you're going, whether you're going with. There are, three basic types of private mortgages. You have the individual private mortgages, somebody that is doing this with their own funds. You have syndicate mortgages. You get 2 or 3 people that get together, pool their funds, and loan out their finances to individuals that need it. And then you have mortgage. You get mixed mortgage investment companies. These are licensed corporations that have investment people funnel their funds together and then invest it in mortgages. And these are power companies that have a lot of money, and they invest in mortgages. And they're the safest bet. They also they're a little bit more stickler on some of their paperwork and stuff like that. So all depends on where you want to go. Their rates are a little bit cheaper oftentimes than some of the syndicated mortgages and individuals. It all depends on where you want to go. And you can find them through lawyers. You can find them through mortgage brokers. You can find them almost anywhere. I mean, we work with a handful of different private mortgages as well, and it they can be very useful. So the rates can is one of the sticklers. Some of the other cons I've talked about already. Short term, they are almost always short term. 6 months, 12 months, 24 months is usually as long as you will see them go. They don't want their money tied up that long. They want to see the investment. They want to see the value of their investment come back as soon as possible. This isn't the bank. The bank gets their money from the interest every month. Most of these private investments are interest only, so they get their money when it's all said and done. So short term, 6 months is very popular. 1 year is the most common. 2 years every now and then. You'll almost never see anything go any longer than that. And other cons is you will see them called more often or more frequently than you will see from the banks and the monoline lenders, because it's their personal funds tied up into your investment, your house. It's their so they will keep an eye on it, and they will watch and make sure you're doing what you said that you would do to keep their investment in line and going where it's supposed to be. Now, some of them are flexible, some of them will work with you as well. So there is that. So there are, as always, and there are more pluses and more minuses on both sides of it. It gets more and more complicated as you go, but those are in general where the areas you want to look at, and that's why we do a private mortgage. We do know our client forms. We do disclosure documents. We do and we do exit strategies with everybody. We make sure they know this is why we are suggesting a private mortgage for you. This is why an A lender or B lender did not work for you. This is why we were suggesting this at this moment in time. And this is how we are going to get you out of it when it's said and done, whether it be selling the house because we've got your value of your house up to where we wanted it, whether we've repaired your credit and we can bring you back to the B side or the A side, anything along those lines. Because most people don't want to be the private side as long as possible because there are, heavier payments, right? So we want to get you back onto the A side if at all possible. So those are the strategies behind the A side and the B side, or back to the private side and getting you to the A side and B side. And those are the pluses and minuses on the private side. If you have any questions whatsoever, if you have any suggestions on what you want to hear on the Next Level Mortgaging podcast, I'd love to hear them. Don't forget to hit that like. Don't forget to hit that subscribe button. I'll be back next week. Have a great weekend, guys.